Joining us now to discuss the crypto markets is IDX Digital Assets CIO, Ben McMillan. Welcome, Ben.
Happy New Year, everybody.
Happy New Year to you, too. So we're seeing Bitcoin right now at about 17,000. It's inched up a bit over the past few days. Nowhere near the kind of movement, volatility, or volumes that we were used to, having covered this for many years now. This has kind of been a dead market. We haven't seen this, of course, since, I guess, crypto winter. And this is coming also, too, as we're hearing now from Fed Chair Powell. He's speaking before the Swedish Central Bank here. And I just want to read kind of in his prepared statements that he's just delivered. Price stability is the bedrock of a healthy economy and provides the public with immeasurable benefits over it. But restoring price stability when inflation is high can require measures that are not popular in the short term as we raise interest rates to slow the economy. So I guess the question here is this. He's saying, look, I'm going to keep doing what I'm doing. The hell with you all. Are we going to see this continue to, I guess, negatively affect the crypto markets at a time when there's already a lack of faith in the crypto institutions? With the recent collapse, of course, of FTX and Three Arrows Capital and potentially DCG and everybody and their mother.
Yeah. No, so you've highlighted kind of two things that I think are both interesting to address. So let's start with the macro. Powell's comments have been interesting because the Fed's been kind of playing this tug of war with the markets all through 2022, in which he was messaging one thing. You look at the rates markets, and they were discounting something much more dovish. And so, Powell's been, very clear that rates are going to stay higher for longer. And then even still, you look at the rates markets today and they're saying, well, we think rates are going to start coming down. We think there's going to be a pivot sooner than later. And so that's the battle he's fighting. And that's definitely weighing on markets. And I actually had an investor call a couple of weeks ago where I said, this is the thing to watch this year, just in general for risk asset classes. And so obviously that's, we're seeing that macro overhang, which was kind of, the weighing down on crypto all last year. But then you hit the nail on the head. I think, what added fuel to the fire was FTX. And the reason that was important was because it was different from all the other blowups that we'd seen with Celsius and Three Arrows and Luna and everything. It didn't shake the institutional community as much. A lot of them were kind of looking at it and saying, we weren't really, involved in that area of the crypto sphere. FTX for many was kind of the blue chip standard. They were crafting legislation in Washington. And so, now, not surprisingly, as a result, we've seen the regulators really double down on regulation. And that's, I think, the risk that a lot of the bigger institutional investors we talk to is they're looking at regulation, they're looking at the regulatory uncertainty, which, I think 6 months ago when we talked, I said, it looks like we're starting to get some clarity there. FTX is just kind of throwing all that out the door. And that's why we're seeing some of these bigger whales sit on the sidelines, is because they're just waiting to see, A, what the next shoe is to drop, aka Genesis. What does that look like? And then B, what does the regulatory fallout look like?
So I'm just going to throw something out here at the risk of completely oversimplifying everything that's happening in the market. I mean, just kind of what it looks like to me. I mean, if you look at Bitcoin's price throughout this whole FTX crisis, it hasn't really moved that much, or at least it hasn't moved as much as one would expect for a crisis this big. And then you look at Bitcoin like over the past year and how kind of it's been all over the place. Is it fair to say that basically what moves Bitcoin price is more like correlations with traditional markets as opposed to actually crypto related news? Because that's kind of what it looks like to me. I mean, if you look at what has moved Bitcoin price over the past year, it's been things like interest rates or just things that was kind of affecting, the S&P 500. And then crypto specific news doesn't really shake Bitcoin as much. I'm just wondering what you think of that, because that's kind of the way that I've been interpreting this.
No, I mean, I think that's right. And I think it's even become more so. Crypto 2022 was the year in which, crypto traded like a risk asset. And then I think what's interesting, because I'm with you, when FTX hit, I was the first to say, we could see a leg down to 10K. And it's been remarkably resilient in spite of that. And so I do think a lot of it is, more the macro overhang. One thing that's interesting is, we have conversations with all types of investors, whether it's, big, institutional pension funds, more retail. And we also have a commodity mutual fund, which has nothing to do with crypto, doesn't trade in crypto. We don't even, message it in any way. But a lot of those conversations, commodities, not surprisingly, is kind of the, the asset class du jour for a lot of asset managers. But even in those conversations, they're starting to ask about crypto. In some cases, they don't even know we have a crypto mutual fund. They're just starting to now look at crypto as an asset class that might sit within their commodities bucket. And so I think we are consistent, exactly with what you said. Investors are now starting to, think about crypto more as an asset class. And so I think we'll start seeing it trade more as a, risk on, risk off asset in the coming years.
So despite the Fed and troubles brewing at DCG, we're also seeing a slight rise in Bitcoin, but crypto whales seem to be staying on the sidelines nevertheless. So where do you see BTC's price headed?
I mean, that's a tricky one. It's, Lawrence had a chart at the top of the segment that showed how low the liquidity was, how low the depth of the market was. I think that's the key thing to keep in mind. This is a very thinly traded market, so it doesn't take a lot to move the price up. We've had a little bit of liquidations in the last 24 hours, which is contributing to this. It could just as easily, fall out of bed if we get, some bad news as it relates to, GBTC liquidations or something like that. Not that that's going to happen, but my point is it's not going to take a lot to move these markets. And again, the conversations we're having with investors, that's what everybody's saying. Everybody is waiting to see kind of, what happens with the DCG fallout. Now with the latest subpoenas being issued, it's kind of all eyes on, Genesis and DCG, the open letters going back and forth. And so it's just, most of the cash is on the sidelines. And I think people are also looking at that against the backdrop of the macro. There's still macroeconomic uncertainty. The recent dollar weakness has been good for commodities. And it's, I think that's contributing a little bit to, some of the risk bid we've seen in Bitcoin. But there's just, it's still most of the capital's on the sidelines kind of waiting for the proverbial other shoe to drop.